Give and Grow Financial. What is up? It's your favorite financial advisors, Eric and Ryan.
Not financial advisors, but
not yet, but we're getting there.
Maybe.
Ryan, it's been too long, brother. How are you?
It's been good, man. This year has been kind of crazy. There's a lot to talk about regards to, the markets, and we haven't really been putting out too much content, but we're trying to get back into it. So we're back. That's it. That's it.
And I have a new shirt. This is the Cool Dad Club.
Oh, the Cool Dad. Yeah.
Yes, sir. I'm a father now. That's another reason we haven't been able to record as much. Wife got pregnant last year, kind of around this time, maybe a month before. Had some complications with blood pressure. A little stressful. Had some preeclampsia. Baby Emma came here a little early. I think she came 31 weeks. But hey, she's doing great now. She's thriving. God is so good.
Amen.
And I'm just happy. It's a blessing, and I'm learning new financial stuff with her. Doing like a 529 and all that.
Oh yeah.
We'll get into that in a little bit, but man, yeah. I'm just blessed. But that's why life has been busy for both of us, and we really want to keep doing this consistently. So things have kind of slowed down. It's a holiday season.
Yep.
And we're just we are pumped to be back.
Yeah, yeah.
How's your life been, brother?
It's been good, man. Just trucking along. Trying to save money as always. If you don't know me, I'm a big saver. I've been trying to maintain a 40 to 50% savings rate for like the past 7 years, and the sacrifices just gotta be made. You know what I mean? Like, it's just one of those things. But we're doing good. Life's good. My wife is good. We are well on our way. Before we get into more about the financial stuff with us, I wanted to give a quick shout out. An establishment that just opened up this past week. If you're in the greater Memphis area, Barefruit Cafe. I'm probably gonna have some photos here of some of the items there, but they are a coffee shop. They sell this new phenomenon called, well, I don't know if it's new, but it's a cronut. So it's a croissant plus a donut into one. They're really good if you like those types of pastries. They're located in Arlington, Tennessee. If you just type in Barefruit on Google, you can be able to see, where they're at. Pop in and give them a visit, man.
I think our wives are there right now.
Yeah. Getting me some.
Get there early.
Get some goods. Oh yeah.
Get there early. Those things, they are selling out fast. From what I'm hearing, the coffee is amazing.
I like coffee.
I'm gonna try hopefully both today at some point.
Yep. So. Maybe in the future, Give and Grow can invest in some Barefruit. I don't know, if they're open to investors. This is, that's just that's another story. They might not. It's okay, but God's blessed them a lot.
Yeah, absolutely.
We're very proud.
Beautiful family. It's a great business model. I love what it stands for. Yeah, just check them out.
My cousins are the owners, and they have been working very hard and been very diligent. And check out Barefruit Cafe, located in Arlington, Tennessee, on the square. Love those guys. We hope that they can continue to grow and do well. But with that being said, let's get into more of what's been going on with us. Kind of more on a granular. Since the last time we actually made a video, which was 2024, man. It's been a long time. Trump got elected. He became our president. The markets and everything were running wild. And if you have been investing at all in 2025, the amount of volatility, continued euphoria, but also some scariness. And I'm not trying to fearmonger anyone, but it seems like at every step of this of the markets going up and up and up, there's always a lot of people coming out and saying that it's going to crash, and we're here to say that no one truly knows. But the way that I personally have been navigating those things, I've been enjoying continuing to stack up my cash reserves. Not that I'm banking on a big crash or nothing like that, but it's always nice to be able to have reserves in case something happens. But it's also a good time to have reserves for something in terms of opportunity.
Absolutely. Yeah, I was going to say, you got to go where the value is. And I would say over the last year, we've definitely been studying more sectors, natural resources, commodities. We've gotten huge into gold. Seen a lot of value there. Seen a lot of hate in oil and gas.
Yeah.
So it's a very interesting sector right now.
Yeah, it's good because I think part of our strategy, specifically with our joint account, we want a lot of our strategy now to be cyclical investing while also keeping in mind the psychology. And if you've been on our channel before, that we're very big into psychology. We're very big into actually doing due diligence and doing our research, but also practicing patience, practicing kind of like he was saying, going where the value is at. And basically the way that we view our joint and view investing, it also kind of goes into our own personal ways of like building wealth and reserving cash and just always being ready. Everyone's talking about how like Warren Buffett has so much cash on the sideline and like he's waiting to invest and he's waiting. And now, some people interpret that as, oh yeah, a crash is coming. But really it's more about, are things on sale? Where's the value? And he's just trying to plan for that. Just going a little bit back into my situation. We're still renting in this apartment, we're still in the same place that we were since our last video. And I'm not saying that I'm wanting, well, I think that a lot of people would love a housing crash. But we don't have the money yet to say, oh yeah, we're ready to buy. Because I think a common thing is, just buy it and then everything else kind of comes after that. But we're trying to be patient, and a lot of people are probably like, oh well, if you don't buy it now, they're going to keep running. Okay, that's fine. What I'm saying is, do I have enough to feel comfortable and secure that when I do get the home, if something happens, like if I get laid off, if my wife gets laid off, if we both get laid off, and I don't know if y'all been keeping up with the news recently, but there's been some massive layoffs happening this year. And you never know if that's going to come to you. And that's the thing that I'm preparing for. I want to be a good steward with what God's given me. And sometimes it means being patient and kind of like blocking out the noise.
Yeah, no, I mean, you bring up some good things there. I always tell people, risk is what you can't see. And when it comes to real estate, buying your own house, you want it to be a blessing, You don't want it to be a curse. So I think what you're doing is awesome. I mean, I say I'm doing the same thing. I'm renting a house right now, just continuing to stack cash. Want to use a good down payment, because when I do get that house, I want it to be a blessing for my family. I don't want to have, extra stresses. I mean, yesterday I was on my way to work and my car just broke down. And luckily I was able to pull into a Firestone. But, I didn't see that coming, I've had a lot of car issues the last couple of months just out of nowhere. But thank goodness for emergency funds. And thank goodness for like the awareness with my finances to have the funds available and to take advantage of that to help me sleep better at night.
Yeah.
That's super important to me.
So yeah, basically, that's pretty much all of my financial situation right now. I'm trying to wait to have the right allocations that I need to buy a home and figure out where we're gonna live and stuff like that. That's all that is kind of like up in the air right now. I also am trying to save up money for a new car, and one thing that has just been really helping out is making sure that I'm living below my means, which I'm continuing to do. And just understanding the psychology of like being owner versus consumer. I really think that our generation has been bred to be consumer driven so much that no one really thinks about just being prudent with what they got, and they see the investing part, obviously, because right now if I were to describe the market, it's still a casino, just like back in 2024. Everybody just wants to get the quick and fast money. They're borrowing a ton of money to go into very speculative assets. People have kind of felt that with the current state of everything going on in our economy, the boomers have lied to us, and we need to make money now. And if we fail, we fail, and we just die. And I think that's kind of like the current situation of like investing. So it's a very countercultural thing, people our age, to be more on the defensive side. And that's kind of how I've been taking my approach with, housing, investing, saving. So what about you? What are some things that you're kind of going through right now that you're preparing for in terms of your financial, let's give like the next like 5 years or so.
Well, having a new baby, that's changed a lot, especially with like the budgeting and everything. Trying to pay off debt. In hindsight, listen, if you have an opportunity to pay off debt early, just do it. I know you can talk about numbers and you can throw all this stuff out here. Well, I'm going to make this return and I've got this interest rate fixed in, but I promise you, like, you will feel so much better if you just pay it off. Ryan can attest to that.
Yeah, I can, because I remember it was like 2022 and like he was giving me all the numbers and the spreads, and this was kind of like after he was really pursuing paying off his debt, and he was like, well, let's just, I think I'm just going to try to just chase the returns. And I mean, he's done well in the markets, but the thing is though, is that debt is still looming over your head, and a lot of the student loans have come back online. A lot of the interest has started to accrue. I mean, we're also seeing with auto loan delinquencies, credit card balances being at like all-time highs. We kind of have a culture of like borrowing, and some people just don't want to pay it off. But if you really want to build wealth, at least to us, paying off the debt is good. And like, I recommended to him back in the day to continue, but he took a different path. So he's come back. He's come. I'm not saying this is like, he came back to the light, but it's interesting seeing where he was then and where he is now. And I'm not trying to be like a Dave Ramsey where it's like, all debt's bad, but there is bad debt. I think that student loans are bad. I think that car debt's bad. Credit card debt's bad. Mm-hmm. There's a way to utilize the debt, and we've talked about this multiple times on this channel. There's a way to utilize debt because I still have credit cards, I have one credit card. It's been able to pay for things that I didn't have to use my actual capital from the work that I've done to do. But it takes discipline. I have a whole video on this on the channel, by the way, if you want to check it out. But it's like there's a way to use it. If you kind of just like put it in the back burner and like just being like, oh yeah, well eventually they'll get paid off, you'll end up being like these people that have no idea how much interest is actually accruing, and they're like, my balance was like $50K, but now it's at $70K, and I thought that I was paying this stuff off.
Yeah, it's crazy.
It's insane, but yeah. Sorry, I just want to throw it in there.
No, yeah, that's good. Yeah. So going back to the 5-year plan, definitely my wife's car that we paid off in May. I might just do it earlier. I might go home after this and do it. We will see. I still have some student loans. I got about 34K, and I really, over the next 3 years, I just want those gone. I would love to be debt free completely before we get a house.
Yeah.
Not a guarantee. Not the end of the world if we're not, but I'd probably sleep better. Currently, like, asset to debt ratio are like at 3-to-1, so it's not bad. Like, if I was investing in a business, I'd be fine with that, but I want to get it to 4-to-1, 5-to-1, and then eventually just I don't want to have any debt other than my house, because that's going to be a whole another thing. It's still going to be a blessing if it's done the right way.
Yeah.
Like I said, having baby Emma, I started a 529 for her. I think after about a month after she came home, I think she's already made like $3 in interest. So happy. I wish I had someone investing for me when I was born, but back in the 90s, they didn't have all the, I guess like the technology and options we have now, right?
Yeah.
You couldn't really just hop on Fidelity and start these things. And I'm thankful for, we do just talking about this stuff, every week, and just education we've been doing to have the awareness. So it can be a blessing, for, my child, or if y'all have kids one day, or just other family members, it can be a blessing getting that snowball going, at a couple months age, beautiful thing. So yeah, basically to sum it up, next 5 years, get out of debt completely. Have a good amount of money for a down payment, huge emergency fund, continue to invest, with our Roth 401k, taking the match. We aren't doing our Roth IRAs currently because we're trying to save more cash and we're trying to pay off the debt faster. And we might still have to make some adjustments. I've considered upping the amount of cash we're doing and just paying up paying off bigger chunks yearly on the student loans. But yeah, and the comments, let us know how y'all view, paying off student loans. Do y'all Dave Ramsey it? Do y'all have like 5-year plans, paying off in bigger chunks? We'd love to hear about that and talk about that. When the debt's gone outside of the house, I just really want to cash flow. I don't want to just invest to invest. I really want to find the value and just get the best returns I can get, but also in a safe manner. Currently, I probably have way too much just in cash. Like in the short-term treasuries, because I keep cutting the rate, so I'm not getting too much.
Yeah, the rate's been going down.
Inflation is well above what I'm getting in my return on that, but the gold's kind of offsetting that. So
yeah,
that's nice. But at the same time, you got to have liquidity available to take advantage of opportunities. But that's my 5-year plan, man. Hopefully, just continue to lead my family, raise Emma, maybe have another one. Try to get a house, but like I said, I want it to be a blessing. I don't want it to be a curse.
Yeah.
I want to be able to sleep at night. And you and I and another partner, we have our own real estate adventure that we're about to start.
Oh yeah,
not too distant future. So get into that. That's going to be huge over the next 5 years too.
With that being said, just some of the things that we've been looking to invest in and like prepare for and stuff like that. So I'll start with like some of the things that I've been doing, which honestly we've been doing very similar things. So you're probably going to hear the same things going in here. But obviously, we talked about a lot how we want to be more cyclical and find where the value is at. Mm-hmm. And we talked a little bit briefly about like precious metals, about oil. Just some things like that. So things that I've been seeing are we're spending way too much money in our government. We just started a cycle of cutting interest rates. We're recording this on the 8th of November, so we're pretty much past two FOMC meetings where they made 25 basis point cuts. And we just talked about earlier how there's been a lot of layoffs, and cuts also attribute to our labor market here in the States. So things that I've been looking at, obviously, like, it's really, I mean, I'm not saying it's like easy to make money in like the S&P 500, but where there's an environment where you're cutting interest rates, and you have a president who is wanting rates to go lower, asset prices would in theory go higher. But we've been kind of like him and I both have been kind of like on this train right now where we feel the S&P 500 and the NASDAQ are very overvalued in a way. And like, I'm fine with like missing out on more gains on those two. I'm more willing to invest in stuff like metals, in stuff like even like slowly dollar cost averaging into like oil through XLE and stuff like that, is because the S&P 500 and the NASDAQ, in my opinion, are controlled primarily by a basket of companies that are heavily invested in AI. So like your Nvidia, your Meta, your Google, somewhat Apple, somewhat. You have Amazon who just announced a lot of layoffs so that they can allocate towards AI. I'm not saying that like this is a bubble, but I don't like how we're so concentrated at the top. I'm thinking, okay, if it's not going to be there, then where else can it be? You can go back last year, and we made a video about economic downturns, and one of the big things that we brought up during that time was gold. Oh, yeah. And you can go online right now. You can go to Robinhood or wherever you chart from, and you look at gold at the start of 2025 to now, and it's made an insane run.
You type in like GLD, let's ticker symbol.
Yeah, GLD. There's like you can find where gold has been going over the past year, and some things that have also attributed to gold's run, because obviously interest rate cuts help gold. But central banks have been buying up a lot of gold. When you think about the psychology of where we're at right now, where gold is like a safe haven asset, a lot of people have just been buying gold. They've been kind of in in fear of something happening with like the overall markets. And even though the indexes have been running this year, gold has been running with it. And I think people are starting to realize that something big might be coming up. I just talked about our like debt issues that we have here in the States. It's possible we're going to be running over $40 trillion dollars in debt coming next year.
Scary to think about.
Gold, gold mining, even like silver, those things have been doing pretty insane this year.
Yeah, I know GDX at one point, which is the gold miners, that was up 100%.
Oh gosh, that's crazy.
Silver's been going crazy this year. Something I've noticed though, I don't know if it's ever moved this strong this early. I think that's shocked a lot of people. I think the central banks have a lot to do with that. They're dropping U.S. debt. I know all the central banks around the world are loading up on gold right now, and that's making a big difference.
Right.
I think I heard a stat where for Americans, I think this was maybe like from 2 years ago, but their overall allocation is like 0.5%, whereas the moon is like around 2%. So I think we're starting to see that kind of catch up right now as well. But man, it's crazy seeing it hit 4,000.
Going back to like earlier this year, it was around like that 3,100, and then Liberation Day happened, and I don't want to get too much in that because that was in the past, but Liberation happened with like Trump's tariffs, and then gold dropped all the way down to around like 2,900, and then since then it made its run all the way to 4,300. And then now it's back down to around like 4K. Gold's kind of like correcting in a way right now. I haven't really done a lot of research into like the war on the dollar, which is like debatable, but in terms of just how much our dollars are actually being able to afford things for us, if inflation's going up, the floor of inflation is probably more like 3%. Than it is 2%, and they use like the CPI data and like the PCE data, which we've talked about on this channel before, and how it's showing to be sitting around like 3%, 3.5%, and it's not getting down to their target.
There's no doubt that our dollars are buying us less and less every single day.
Yeah,
and that's usually what happens when the debt gets unsustainable. They have to continue to print, and that's always going to devalue that empire's currency. Empire, I mean the United States. And gold typically does very well during those times, as do other commodities. So,
but yeah, that's pretty much what I've been looking to get invested into. There's obviously like a bunch of gold tracking funds, gold mining companies, and even stuff like silver and like silver miners, stuff like that. But I haven't really done much on the silver miners, but I've done more on like big gold mining companies and gold and XLE, which is basically a basket of the best energy / oil companies. So I've been doing that. I'm not dumping everything I have into it. It's just kind of like what he was saying earlier. Like an allocation of my portfolio will be going to that, and the rest will be kept in like short-term treasuries until I find that there's probably somewhat of a bigger pullback in like the bigger indexes, and I can start dollar cost averaging into that. But
that's awesome.
The key is like right now. Because of the state of like the economy and everything that I've been kind of researching, if I miss out on more gains from the market, I'm perfectly fine with that. But I want to make sure that my floor is good, my foundation is good.
Absolutely. I've been getting a lot of questions about how do I buy physical gold? I get that a lot. Do you have one you like specifically?
Physical gold?
Like a way to buy it?
Oh, like a way? No. So I just invest in like we haven't talked about this, but like the Sprott fund for gold that tracks gold. It is basically like GLD, but it's backed by like by the physical
gold, and it's audited way more than GLD.
Right.
Not saying GLD's. GLD is, I view that more as like paper gold, essentially, whereas PHYS and the Sprott products are 100% backed by actual physical gold or physical silver. And I like the PHYS.
Yeah. PHYS.
And it's stored in a vault in Canada, nice and safe.
Yeah. That for silver, PSLV is the silver one.
I've been getting a lot of questions on social media about, should I buy gold now? Is it too late? When I started talking about gold, I think it was in the 2000s, and now it's gotten up to 4,000, maybe a little bit less right now. But this is the way that I view it. Don't view gold as this investment or a trade. It's more like insurance. It's protecting your purchasing power. So if you had $5,000 that you had in 2020 that you just spent on groceries, and you compared that $5,000 to what it bought you today in 2025, probably buys you not necessarily half, but maybe 3/4.
I like how you said that you should view it as more insurance, and all of this information is online. But if you look at like the 80s and you see where gold and the dollar have gone, the dollar has lost over like 80% of its value. Gold has just been going up. And even though gold has been kind of like, during those times in the 70s, gold had the big spike, and then it got, it did get crushed for a while, and then it was stagnant for a while. And, even now gold has only been seeing these record runs go up, and even though that is the case where gold probably looked flat for a long time, even looked like, it was underperforming the markets. If you compare that to the dollar, if the dollar has lost 80% and gold over the past like 4 decades has made, and I don't really have that number on me, but if it's better than minus 80%, if you view your purchases in terms of dollars versus gold, like, things are cheaper.
Things are getting cheap right
now. Yeah. They're cheap in terms of gold.
Yeah, that was what I was going to say about 2020. If you had that same 5K in gold that you were using for groceries have actually gotten a lot more cheaper.
Yeah. It's wild to see.
These are the times when when precious metals do well, especially
heavy metal.
Gold.
Yeah.
Heavy metal, yeah. But yeah, to protect the purchasing power of your currency. So don't compare gold to Nvidia. Don't buy it thinking, oh, I'm going to buy this and it's going to double to 8,000. It could do that over the next 5 to 10 years, but understand it's insurance, and that's because it's not a good situation for our dollar.
Yeah.
So just it's not a trade. You're not buying it like it's a stock. Don't even compare it to Bitcoin either, because that's a whole. I don't even want to get into that. But that's a whole different subject. But no, if you do want to buy some gold right now, it is pretty high. I told some people, it needs to take a breather. But yeah, if you use like the 50-day average, if you have a portion you want to use, anytime it gets to around that 50 days, it's not a bad idea to buy a little bit. I buy it every single week. I want to get up to about 10% of my overall allocation into gold. I'm getting there. A little bit into silver, but just know silver is a little bit more a little more volatile. But I do think over the next 5 to 10 years, those are going to be good trades. Those are going to be good. I just said it myself. They're going to be they're going to be good investments in relation to protecting the purchasing power. So another thing, the trade side of this is when you think about the gold stocks, because I'm talking high quality. Because the gold that we're pulling out of the ground now, it's one thing when it's 2,000, but now it's 4,000. I mean, these gold mining companies they're printing cash right now. But you got to start with the high quality. I personally love the royalty and the streaming business model. So I love Franco-Nevada. I love Wheaton Precious Metal. Agnico Eagle, that's a great senior producer. They're kind of like almost. I don't want to call them like the Berkshire Hathaway of like gold, but they're not far off. They're a very good company. So yeah, just something to keep in mind. I like to do 10% in the physical, and then I have an allocation for maybe 10% for the miners, maybe 5% for the silver miners, and I'm also starting to accumulate oil and gas right now, trying to get up to 10% because you got to go where the hate is, but you have to start with quality. XLE is great, ExxonMobil. We're also natural gas right now. It's been golly, natural gas, that's a whole other story, but Devon Energy, stuff like that. So just throwing some names out there. But yeah, I get a lot of questions about that, so just wanted to just talk about that for a little bit. So I'm not telling everybody to take all your money and just put it into gold, because there is volatility. But I'm saying it's smart to take a 10 to 15% allocation just to offset the purchasing power that you're losing in your dollars right now from inflation and this debt that continues to get crazy.
Kind of end us on this episode. We appreciate y'all being being patient with us on this channel. Like we were saying, life just kind of gets in the way sometimes, and you got to step away. But coming from someone that likes to grind, I should be doing more on this channel, which I plan to. So some things that we're going to be getting back into is hopefully doing more of these. We're going to try to do maybe one a month to start up, because with him having Emma, it's going to be it's been difficult to find time to record, but we're going to do that. I want to do a lot more videos going over our joint account, because we've been investing in that a lot more. I know back in the day, especially this year, we were selling options a lot more, and we've been, we're still selling options now, and
successfully.
Yeah. We're on pace, I think, to around like 5 to like maybe 6% in the joint. And a lot of our downside risk is really not there. It's like, but we can go into those things. He mentioned a couple of the names that we've been investing in. So we've been making small buys daily on some companies and some indexes and things like that. So we're going to get into more of that, hopefully going forward. I'm going to try to have a plan for that. But yeah, I mean, that's kind of like what we're going to be doing. I want to get more involved in the channel. I want this to be a place where we can be able to discuss all things investing, all things money and psychology, and stuff like that. So that's where we're at right now. 2026 is almost here. So if you don't see many videos going up until 2026, it's definitely going to be because we are going through the holidays and scheduling, but we're going to do this on our own time. And that's really it. Hopefully 2026 you're going to see a lot more of us.
Yeah. And hopefully when we do this December monthly video, I'll have a big glass of eggnog in my hand.
Eggnog, maybe some whiskey in there.
Oh gosh.
No. We just shouldn't be doing that. But yeah.
But yeah, I want to end on a positive note. I'm pumped. We're back.
Yeah, we're back.
We love you guys. We're ready to have some fun again. Like he was saying, psychology of investing, the foundation, planting the seeds, what we're actually doing, not just talking about it, but actually showing what we're investing in. And we're going to be here for a long time watching this grow, not only our accounts, but also this community. So I just want to end on that. We love you guys. Enjoy the holidays.
Oh, yeah.
As always, let's continue to give and grow.